This is your market recap for June 27th, 2025. Today I was expecting a larger retrace than we got. I was expecting a 20% of the weekly range retrace, just like usual TGIF. However, that did not happen due to us playing bullish early AM session. As you can see in the daily candle, we took out this high and then kept going. That was the bullish run after market open. And then from there, we came down to this low and then closed back up at above this high at a respectable position. If we go down to the hourly, we can see not the cleanest Friday. We started market open, came down, took out this low, which was an SMT. We then rallied, taking out this high. Oh, sorry. This high here was not taken. It was taken pre-market. It was taken during London. And then New York session, I believe this was the 8:30 news we had today. Up to market open, took us to this low, and then market open rallied us above this high here. And then eventually we came back down. Didn't quite get to 20%. We're pretty close though. And then we came back up to this hourly for rally up to close. If we go down to the 15-minute, we can see, again, that SMT there. So my bias going into today was bearish. The reason for that is because we had a huge bullish week and we had yet to retrace 20% over the weekly range like we usually do on Fridays. So I was playing bearish. I saw us take out this high, take it out one more time, and start to break down below this low. I saw market open and this SMT as an opportunity for price to pump up. I was looking at this 15-minute inverse right here, mainly. But as you can see, we ripped through that up to the upside. Now, the only reason I can think that we disrespected that is because on the hourly time frame, we had that SMT. And SMTs usually cause price to seek either, it seeks inefficiency in the market. And so with this SMT of sell side right here, there's no inefficiency on the hourly time frame here. Now, the reason it's the hourly time frame that we look at here is because that is the highest time frame that we can still see this SMT. Like if we go to the 4-hour, that low doesn't exist, so there's no SMT. Next is the 1-hour. Boom, exists. So then we look there. And as you can see, we don't see any inefficiencies through here. So target for the high. If we go back to the 15-minute SMT there, takes out this high. Great. We take out this high, start to retrace. Nice equilibrium of this bullish move. Get another bullish expansion. I'll talk about the timing earlier. SMT of these highs here, beginning of lunch, told us that we're going to start selling off. And that we do, we kind of sell off for the whole rest of the day, targeting this right here. This was one of my profits that I was looking at. The reason for that is if you fib the bullish move, and then, and then we throw on the negative 0.5, we can see right there, right? Because my profits would be, it depends on how low time frame I got in, would be this low, and then 20%. And this is too big of a gap for my opinion, or for my liking, to not have another profit in there. So boom, I'd slap the fib right there, which was actually where price reacted off of. And then obviously retraced back into the range. 5-minute, there's really not much more. We see a nice reaction off that 15-minute inverse, right? We see you have this 15-minute here, multiple reactions off it, perfectly validates it in my opinion. And then we come down here, take out this low SMT. Like I mentioned, I was counting on this to play us bullish to get into a premium that would be to go short. But that didn't end up happening. We ended up ripping up, as I mentioned, because of the time frame that this SMT was on. targeting this liquidity there. Now, once we hit that liquidity, we started to retrace. 50% of this bullish range is right here. So we hit that inside a 15-minute fair value gap, start to play bullish, and then we react here, bearish off this sell side imbalance, buy side inefficiency right there, which validates it. We then close up here, above it, boom, concentric encroachment, expand up higher, going into lunch. We then get an SMT of these highs, which causes us to start to play bearish along with the overarching bearish bias of TGIF Friday. We then have this 5-minute fair value up here, which is reacted off once, twice, and 3 times before market opens, algorithm kicks back in at the start of PM session. We take out this high, SMT right there, and then that sends us lower. It would have been a perfect trade to take for PM session, but I typically try to avoid PM session of Fridays. So down on the 1-minute time frame, we can see again, high time frame SMT was pushing us higher. We have this lower time frame SMT, but I kind of just equated that to the messy market open. There wasn't really much fair value up here, disrespected and whatnot. It's a whole lot of, at least from my point of view, kind of messy, and I just didn't want to get in that. So what I did get in was this right here. Right, I think I entered in this candle right there. So like I mentioned, there's a 15-minute inverse here that I saw, so I extended that forwards. We tapped concentric encroachment of that. We then started to expand lower. It was a good time. It was equilibrium. I believe it was equilibrium of this move. Yeah, equilibrium of that move. So I was okay taking the short. We were also expanding lower, and on the 15-second coming up into inefficiency, so I took that short there with my stop up here. And then market kind of went into a whole lot of nothing, took me out. But then, of course, eventually it did come up and take out this high, which, I mean, looking back, it makes sense. If we look again, AM session was decided by that hourly SMT that we can see down here. We then, like I said, started to retrace equilibrium right there. Macro was the bottom of this retrace. That's nice. Expand upwards. No SMTs at these lows, I believe. 1-minute fair value gap. Nice expansion here after the validation of this 5-minute sell side imbalance, buy side inefficiency there. We then close up above it, come back down, touch concentric encroachment, expand again. SMT of these highs. During the macro, starts the move, we have an SMT of these highs once again, where ES keeps climbing up and NQ doesn't, which ends up pushing us even lower. Algorithm kicks back in, 130. We have an SMT of these highs, and then an expansion. This is a very quick expansion. I doubt there would be anything found on the 15-second even, but if we look at the macro here, I would look at SMTs up here, but I don't really want to pull up ES right now. Actually, let me just pull it up on my phone. We're looking at the 150 macro. Yeah, there we go. The 206 candle was higher on ES. So boom, SMT there. 15-second down here, changing this data delivery for sure. Whether or not you'd find a inefficiency on the 15-second, I am unsure of. But this would have been a good trade. Good trade to take if we were looking to trade PM session of Fridays. But like I said, I usually tend to steer clear of that. So SMT pushed us down, retraced up, macro, SMT again, expansion, maybe 15-second inefficiency, taking this profit all the way down to this low here and this low there. And then that fib expansion. We would have gotten stopped out because my fulls would have been down at the 20%, but this would have been a decently sized trade. nonetheless. So very atypical Friday, in my opinion. Does it make sense? Absolutely. We need to retrace on Fridays. That's usually what happens. We don't usually see as much volume going into the PM session on Fridays, but I think now I'm only speculating at this point, but if we look here from 10:11 all the way to, what would that be, 1:45, so almost 3.5 hours, we are in this range, right? Down, up, at least on NQ we were. So we needed a big expansion to get us out of that. In which direction is the market favoring sells? That's all I can speculate at. Bullish in AM session makes sense because of this hourly SMT, like I've mentioned a million times. SMT is here. If you waited for PM session, okay. If you took this during lunch, that's even better. I just don't have the experience to trade lunch, frankly, because I just never look at the charts during lunch. But if I was expecting Friday to play as it did, this would have been a very good trade to take. Now, going into next week, after such a huge week, I mean, we had 2 small weeks, so a big week was kind of to be expected. Given the fact that we did not fully retrace to 20% of the weekly range, I am looking for us to do that on Monday, Tuesday, depending on where we open and whatnot. That might be a decently sized move. But next week, I am looking for us to take out all-time highs. Whether we close above them or not, I do not know. After such a large week, I wouldn't be shocked if we had another kind of consolidating week. But really just got to see what is delivered. We're staying within this hourly. Could help us in playing bearish to get to the 20 or 30%. That is the first thing on my list on next week's trading, is to complete the retrace that we failed to do today. So this has been your market recap for June 27th, 2025.